it looks like it's starting to pick up steam, and the rotation we're talking about is a sector rotation out of tech, which has handily outperformed in 2017, and into more value-oriented sectors like banks, energy, and retail, those things that have underperformed. If you look at the last month, those sectors have outperformed. I think that can continue in 2018.
Do you see stability for energy here at this point? And we saw a huge run, right, in the price of Brent over the past even just month or so. We saw energy stocks respond, but more modestly.
Yeah, and I think that's going to continue because I think that the market is still concerned longer term about oil. I mean, we still have a long-term supply problem. But in the near term, I mean, you're looking at the energy SPDR is down 7% still about year to date. So there is some value there. I think that energy is a decent place to allocate some risk capital here as we start 2018. There's some value there.
Professor White, as you take a look out, we were just talking about interest rates reaching the sort of critical level on the 10-year, wondering if we're going to push much above that. We've got a lot of central bank action that could happen this year, including what our Fed is going to do. What's sort of the biggest wild card in your view?
Oh, the wild card. Politics. Politics are always the wild card. And I would really worry about Middle East politics. I mean, all bets are off if, a country goes up in flames or we have a major military setback. Then who knows what the markets will do and what interest rates might do. So politics.
Really? So it's not a misstep by a central bank. Because what's interesting about that statement is that 2017, politics was the wild card, and then turned out to be actually a positive force for the markets.
That's right.
Much
and
more
it
to the
can
upside.
be. That's what wild cards can turn out fine, or they can turn out to be something you wish you never had. And so. More of the same in that.
But North Korea probably too.
North Korea,
Andrew,
of course.
when is the? You got your ticket. When is that?
Oh, the Olympics.
Yeah.
The Olympics, February.
Yeah.
Beginning of February 9th, it's a Friday.
You got your...
Through the 22nd.
So that's coming up, too. And the world will be there,
including
Andrew Ross Sorkin. Right.
You're going to be there. Oh,
we're going to be covering it for CNBC. Do you think, though, I mean, you tell me, you think there's going to be a problem during the Olympics? Or you think there's going to be jitters?
I would say jitters leading up, probably no problem. But, hey, I'm a mere economist, and I'm raising the political questions. I wish I had answers. I just have to raise those possibilities.
Right. Is there any bubble emerging in any particular pocket?
Are you?
Well, I'm what should I say? A cryptocurrency cynic. Unless they become important vehicles for international funds transfer, I just don't see the future. The technology, the technology.
But is there anything that the bubble of cryptocurrency says about the larger market, or is there a possibility that there's enough money, either in cryptocurrencies or some other bubble pocket, that if something goes wrong there, it infects something else elsewhere?
I don't see the infection.
Okay, good.
I mean, we would worry about a 2008 type infection, but financial institutions, especially banks that are at the center, are better capitalized.
Well, they're also not exposed. In large part, institutional investors have no exposure to Bitcoin, as opposed to 2008. So it was a very different story in terms of the spread of some sort of contagion.
That's right.
Tom, I'll pose the same question to you as you take a look out. Do you see bubbles? I mean, you mentioned the rotation out of technology. Why a rotation out of technology? Something that is working, something that actually has growth. Is it valuation?
Well, I think that's part of it. I also think we're maybe on the cusp of a rising economic tide. So in 2017, and 2016 also, people funneled into tech because, we kind of had middling economic growth. So tech offered both growth and safety. Now, as the economy appears to be coming on a bit stronger, you can go down the chain a little bit. You can go to banks. You can go to potentially energy and consumer discretionary because there's a rising tide of growth that can help those sectors. You don't need to pay the valuation premium to get the growth in tech anymore, assuming this economic growth continues to accelerate, of course.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.